What's going on, guys? Welcome back to the channel. In today's video, I'm going to be going over the trades we end up taking today inside the Discord, as well as the game plan going into tomorrow. So this is what we looked like off of open going into today. Market was still bearish just based on this chart right here. 30-minute chart on the puts tells us what the current trend is in the market, and off of open we were still crossed here on the 30-minute, which means we're bearish. Obviously that didn't end up holding up into the close. We ended up crossing negative here on the puts, and the market's currently neutral. So I did take a couple trades today. Today was an awful day, I'm not gonna lie. Like, nothing really ended up playing out in my favor. So yeah, it was a solid red day for me. We're gonna go over what we did take, and yeah, my bias today was just shorting, like taking shorts. I mean, it was pretty simple because of that 30-minute chart. There was still that chance that we were going to end up, getting a bounce today because of this 4-hour chart, which I went over yesterday. But I'm still gonna play with the 30-minute trend, and especially since we end up pulling back, in that 30-minute 50, where I'm still going to be favoring the downside, even if we're at these higher time frame areas. It just looked really bearish, and obviously that didn't end up playing out. But yeah, that was my bias for the day. And yeah, so if we look here on the 0DT chart, this is what I end up taking. Very simple trade up in here. This is the wrong chart. So we ended up taking, what was the first trade of the day? So yeah, originally, like right off open, I ended up closing my other half of the puts that I swung, which I should have held those. I mean, I pretty much sold those at the top today, but is what it is. I ended up selling those right off open because I didn't really, I didn't love the look of where we're at, and we still had room to drop a little bit to the 30-minute 50, so I just cut them. And yeah, we closed those out, I think, for like 20% on the remaining. I initially ended up trimming half or 60%, trim the rest at 20%, and then I ended up taking a short at 10.52, and it was just this 50 dip down in here. And of course, this other 50 dip ended up holding nicely. I honestly thought we were going to hold again just because of how we looked on 30-minute, and also I think we're at a fib level as well. If we look at 10.55, I'm not sure if we were. I was pretty much just buying that 50 dip. Let's see, 10.55, which was, yeah. So actually we weren't at a fib level. So we were actually right up in this area. And I was just taking the chance on that 50 dip on the 5-minute. That was pretty much the premise of the trade, and we ended up breaking below that. I took SPX on this, so I was shooting for 150, 200% on this, and yeah, I ended up stopping out, I think, for like 40, 45% on this. So yeah, that was the first trade I ended up taking there. High risk reward trade on that one. I was looking for that 50 to hold and pretty much trend us lower rest of the day, but obviously that didn't end up happening. So what chart did I just pull up? I don't know what this chart is, but oh no, that is the correct chart. Never mind. So yeah, that was the first loss we ended up taking. This chart lost the 50, started to break below, so I got out. No point to stay in that because it's most likely going to just trend higher because of this chart crossing negative. And of course, we got back up at that fib level. And then next trade of the day was another short at 11.09, and I know this was a fib trade because yeah, we popped up in this fib up in here, 78.6 short. And yeah, this pretty much just got ran through immediately, and I ended up stopping out of that. It did end up pulling back a little bit eventually, but I mean, we still, if we look here on the 30-minute, we still couldn't get back under it on the 30-minute. So you can see we closed back above it, which isn't the best look for the bears, and then it retested it, ended up breaking below it a little bit, like on a smaller, like on the 5-minute, but ultimately this ended up wicking back above it, held, and we just ended up going up to this next flip here at 68.80. So yeah, that was a 10-point loss, or no, not 10-point loss, but ES ended up going 10 points. I had a bit wider stop on this. I forget what I ended up selling. I think this might have been like a 60-point loss on NQ on that one. Had a bit of wider stop, but I mean, typically, if ES goes 10 points, NQ will be around that 50 to 60% or 50 to 60 point mark. So that was trade number 2. And then last one of the day when it came to SPY was a swing short, and this was a small loser because I just ended up buying this dip to the 50 up in here. Bought this dip right in here at right around like 296. I grabbed like way out the money contracts, and that was probably not the best thing in the world because those never really went green, while these were up probably like 30%. I grabbed the was it 650 puts for 223. There was just insane volume on them. They were super far out of the money, so this did end up holding. That paired with the massive volume on those 650s. I mean, this would have been a massive trade if this ended up holding. So that's kind of the reasoning behind that. Probably wasn't the best decision to grab those, but I mean, there was like 50, 60K volume on them. And if you looked on the chain for that week, I mean, there was nothing anywhere near that type of volume on that 223 chain. So I took a chance. I think I stopped out for like 15-20%. So wasn't really much of a loss when it came to that 50 dip, just because of how small the risk was. I mean, we bought the 50, started to break below it, and I got out during this candle right up in here. And yeah, that's pretty much what we did when it came to SPY. I ended up taking a loss on Hood and Palantir as well. Those are swings for shorts. And again, like all these, like when I'm taking the option trades, these are super high risk reward trades, at least for these ones. Like this 30-minute 50 dip we bought on Friday, that was massive risk to reward, because if we lost, it would have been just like this, like that, like 15-20% L. And then yeah, I'll go over Palantir real quick and Hood. I mean, they were pretty much identical trades. It was just higher time frame, 50 SMAs. If we look here, let's see here. We'll start off with Hood. I don't know if this is the right contract. Yeah, 220. So if we go on the 4 hour, I mean, it was pretty much just playing this 4 hour dip. I mean, the better entry would have been right off open. I ended up buying it pretty much at the peak, which was unfortunate. I bought it at like 110. I just liked how it was setting up. We were bouncing off this 4 hour. This candle ended up obviously closing below it slightly, but then we ended up holding it. So I'm like, okay, getting back above this 10 and the 50. Let me get in this, and yeah, we ended up getting stopped out of this. These were bigger losses in terms of percent, just because I had a wider stop on them. Because this is a higher time frame. You can see what happens when we like wick below. I mean, there's going to be some drawdown on this, but the risk to reward on these is through the roof. I mean, if you bought this dip, 59, you would have been down to like 44, but this ended up peaking like at a couple 100%. So, that was kind of the premise of this. These were going to be over 100% trades minimum if they end up playing out. Obviously, that didn't end up happening, but that was the thought process on them. I mean, I usually don't hold for like 50% loss, but when I'm aiming for a higher profit target on this is it's still a solid trade to take and worth the risk. So that was Hood. I mean, Palantir, pretty much the same chart. If you look on the 125s, pretty much the same chart, 4 hour chart, pretty much identical, like I said. And yeah, same concept. I'm not going to re-explain it. I mean, it was the same exact chart. So that's what we end up taking today. It was pretty much a million losses. I mean, I probably haven't had this bad of a day in a long time when it came to losses in a row or in a single day, but it's part of the game. Hopefully tomorrow we get a good setup in. When it comes to tomorrow, what do we look like? So if we look on the 30-minute here on the puts, this chart is starting to cross negative, which definitely not the best look for bears. I mean, this chart is definitely more bullish than bearish, just because we lost the trend here on the 30-minute, crossing down. And I mean, if we can't get back above that 50 tomorrow, then we're obviously going to see a move higher. I mean, the higher time frames on here just don't look good at all. I mean, there's really nothing helping us for the downside here. So game plan tomorrow, pretty much if we open flat / green, look for a call cross. If we end up gapping down quite a bit and this crosses back up, then look for your put cross. Very simple game plan. When it comes to the fibs now, this is what you want to be looking for. We're in the scenario where, okay, we cross negative on that 30-minute. Now, what do we look for? We're in a range. Where were we when we crossed down? We're between 78.6, 61.8. This is the range you want to be looking for, and this is what you have to watch for if we are going to be changing the fibs. Ignore the 50% mark. Like I always say, this is just pretty much for take profits. I'm not taking direct trades off of that fib level. Ignore that one. But wherever we cross negative on that 30-minute is the range you are going to be looking to watch for. So we're between 68.80, 69.45. What do we do now? Wait for the range to break. If we break out higher, that is where we change the fibs. And I've been going over this last couple videos, but I'll do it again. we flip the 0% and the 100% mark. So 100% is now going to be at this upper pivot, and if we break out of this range to the upside, which means we get a 30-minute candle close above that level and we go at least 10 points above it, then we end up changing the fibs, and this 100% goes up here. 0% now goes to this new low down in here, because that was the last swing low of the previous bear trend we had. So, since we went neutral, that is the now most recent bear trend we had, and that's one we use for the lower pivot. If we end up breaking back below 68.45, and we drop lower, then this is going to be the same fibs. We're not going to change it. We're not going to, there's no point. It just doesn't make sense to, because if we end up breaking back down, that pretty much says, okay, bulls can't take this, we're most likely going to go lower. So that is the thought process when it comes to changing these fib levels. It's pretty simple after you see it a lot of days. I mean, it's probably going to get more ingrained in your head, because I'm just talking about it last couple of videos of, if we break out higher, we drag the 0% down here, 100% goes to this high, and those are your new levels. It's very simple. So yeah, when it comes to trading these fibs now, I'm honestly probably not going to be trading the range, most likely. I want to see kind of what the 30-minute looks like when we're pushing into these levels. I probably this 68.45 is probably not going to be a long for me, just because it's going to be the first test of this level after we cross negative, and playing that first test isn't the most probable setup, because there's been plenty of times where the first test of this level just gets broken right through. You pretty much have to wait for the range to be confirmed. So after we get a nice bounce off this level, and we're now in that range officially. We're not just going to break right back below it, and we're going to be more neutral than we already are. So yeah, I'm not going to be buying this first dip down in here. If we get a nice bounce from it, okay, maybe eventually I will, but that's not really a trade I'm interested in taking. This short up here could possibly line up with the 30-minute 50, and maybe not. I was going to say maybe if that lines up with this, but we will probably break out of the range if we end up hitting that 30-minute 50, or if a fib level lines up with this 30-minute 50, that will probably actually be a good trade to take. So that's definitely one you want to watch for, is this 30-minute chart on the calls pop up to this 50, and then look on ES, what fib level are we near. If we pop up to 69.30, that'll probably be a good fib to short, and that's well, technically we will be changing the fib, so that won't actually be the level to short. So that's just something to look out for. But more what I'd want to see is break above 68.80, get a retest of it to go long, and target the next fib. So if we break out higher, I keep saying the 68.80 break and retest, but the fibs are going to change by the time that happens. So whatever the fib level is, when we break out, look for a retest of it and take that for your long. So yeah, that's pretty much all I got. If you guys enjoyed, drop a sub if you guys want to learn. Join the Discord down below. That's all I got. I'm out. Peace.